Today, we are taking a close look at the latest earnings report from a company called Waterdrop. And let me tell you, they just posted a quarter that was so explosive it made everyone on Wall Street sit up and take notice. But as we're about to see, underneath these incredible numbers, there is a really high-stakes bet on AI that tells a much, much more complicated story. Okay, let's get into it.
So, right off the bat, here's the big question, isn't it? How on earth does a company, an insurance company no less, more than double its revenue? We're talking a surge of over 100%. So what is the engine behind all this? Is it just some kind of one-time fluke, or have they actually unlocked a whole new formula for growth? Well, that is exactly what we are here to figure out. And here's our game plan for today. First, we'll look at those blockbuster results. Then we'll pull back the curtain on what they call their AI native engine. After that, we'll see exactly how AI is changing the game in both their insurance and healthcare divisions. And then comes the twist, the high cost of all this growth. And finally, we'll wrap up by looking at what this all means for Waterdrop's next chapter. Okay, let's kick things off with the numbers that got everybody talking. Seriously, this wasn't just a good quarter for Waterdrop, it was a massive statement. They didn't just meet the expectations, they completely blew them out of the water. Now, what's so wild here is just how much they beat expectations by. Wall Street was forecasting about $117 million in revenue. Waterdrop came in with over $201 million. I mean, that's not just a little beat, it's an absolutely massive surprise. It shows their growth is accelerating way faster than anyone thought was even possible. So that brings us back to the question, how did they do it? Well, according to the company, the secret isn't just about using a few AI tools here and there. Nope, it's about fundamentally rebuilding the entire company from the ground up, all around AI. Let's take a look at what they call their AI native strategy. This quote right here from their CEO, Shen Peng, is so important. He's making it clear that he's not just talking about, adding a few chatbots and calling it a day. He is talking about a complete and total overhaul. It signals a level of ambition that's just, well, it's way beyond what most of their competitors are even thinking about. So what does AI native even mean? Well, think about it like this. Instead of just handing your employees some new AI software, you redesign every single step of your business, from how you find a customer to how you handle their claim, with AI right at the very heart of it. It's not an add-on, it's a foundational shift. And you can be sure this isn't just talk. The company has filed 72 patent applications, all related to large language models. That shows just how serious they are. They're not just buying tech off the shelf. They are actively building their own secret sauce, their own competitive advantage. And just before you start thinking, oh, this is just another tech company burning through cash to grow, check this out. They've had 16 straight quarters of GAAP profitability. That's 4 years. This track record proves they have financial discipline. They actually know how to make money, not just how to spend it. All right, so now let's see how this whole AI native idea is actually working in their core insurance business. This is where the impact is, well, pretty dramatic and really easy to see. 125%. Let that sink in. That's the year-over-year growth in their insurance income last quarter. A number like that is practically unheard of in the insurance industry. So the big question is, how exactly is AI making this happen? Okay, just look at these specifics. Their AI Pro insurance agent single-handedly pushed premiums up by a third in just 1 quarter. They've got a co-pilot for their human agents that has already handled over 370,000 inquiries, which frees those agents up to focus on the really complex stuff. And get this, AI is handling over 1.4 million customer service chats every single month, and their quality control is almost 3 times more efficient now. This isn't theoretical. This is AI delivering real, measurable results. But believe it or not, it doesn't stop with insurance. Waterdrop is taking that exact same AI native playbook and applying it to their healthcare division. And this includes a massive medical crowdfunding platform and even a system to help people enroll in clinical trials. And the scale we're talking about here is just immense. Through their crowdfunding platform, almost 3.7 million patients have gotten financial help. So this isn't just about business. It has a huge real-world social impact. And now they're using AI to make the whole process safer and more efficient. Now, this is where it gets really sophisticated. They're using AI to do things like real-time data masking to keep patient data private. They're using it to double-check medical data to make sure claims are authentic. And my favorite part, their patented eFind tech can match a patient to the right clinical trial in minutes, a process that used to take weeks. This is cutting-edge stuff solving real-world bottlenecks in healthcare. So up to this point, it's just an incredible story of innovation and growth, right? But like any story of super fast expansion, there is another side to the coin. And this is where the plot really starts to thicken.
So here it is again, that explosive revenue growth over 105%. It's fantastic. But now, let's put that number in context.
Whoa, look at this. Sales and marketing costs grew by a staggering 178%. Overall operating costs are up 109%. So here's the catch. Some of their most important expenses are actually growing faster than their revenue. And that is the central tension in Waterdrop's story right now.
Now, the company's explanation for all this is that it's a deliberate choice. They say they are intentionally pouring money into marketing and AI to grab as much market share as they can and to solidify their tech advantage. They're framing it as a strategic investment, not as a problem with runaway costs.
And all of this brings us to the big question. What does the future hold for them? Well, the answer really depends on whether you're a bull or a bear when it comes to their high-spend, high-growth strategy.
So let's just break down the two sides here. The bulls, they're going to point to that competitive advantage they're building with AI, that proven track record of being profitable, and the fact that they have a healthy pile of cash to fund this whole thing. But the bears are going to look at those skyrocketing costs and wonder if this growth can even be sustained without all that spending. And they're going to ask the big question, is this massive AI bet going to pay off in the long run, or is it just going to drain their cash? And honestly, that's where we have to leave it. Waterdrop is running a fascinating, really high-stakes experiment. They're betting everything that by going AI native, they can create a level of efficiency and a competitive advantage so powerful that it'll justify this massive upfront cost. The question for investors and for the whole industry is pretty simple. Will this gamble create a new kind of profitable powerhouse, or will it just be a really, really expensive growth engine? Well, the next few quarters are definitely going to be telling.